Hey, this is Trader Travis, and I am sharing videos with you that profiles either a tip, strategy, or concept taught in the Success Academy. So that way you can get a sneak preview of the type of education you will receive in the Success Academy. Now, all the education is built around our 5-year retirement plan. Every single bit of education is designed to propel you through that 5-year journey to financial freedom. So I do hope you decide to join our trading tribe, but even if you don't, I hope this video adds value to your life. You take care, and I hope you enjoy. And I have a quick market commentary that I want to drop in to warn you, and I'm going to not advise you, but caution you that maybe you should be a little fearful. And what I want to talk about is Warren Buffett as well as the stock market. Because I looked at the stock market today. First, I was pleasantly surprised when I logged into my accounts today. My current trade, at the height, I think it had like a $2,000 profit today alone. And I was like, wow, okay, that's almost half. It's like before, all right, so today it shows profit of $5,000. So if I earn $2,000, then that means, okay, I had a $3,000 profit initially. So I was looking at my account, it's like, okay, my account just jumped about 50% in one day. And, and I'm like, okay, what's going on? I look at the stock market. I'm like, well, the stock market is raging higher. And I'm showing you this here. I'm sure by now I at least like to know that you know my heart, that this isn't to brag. I want all of you, is what I said on a live call. I want, my heart is to anoint you with this skill so you can do this too. And I'm here for you. If you're not having success, you have to reach out for help. You can't suffer in silence. And, I'm showing you this not to brag. It's just I'm a fully transparent person. I want to show you both profits and losers. So I'm always going to show you both my winners as well as my embarrassing losers. That's just how I am. I want to be fully transparent so you can see how this works in real life. And also know that just because, if I'm having success or even if I'm failing, that has nothing to do with you, because there are students doing way better than me as far as profit wise. There are students who do worse than me, and there are students who do about what I do. So never compare your journey to mine. You always want to compare yourself to yourself. Just run your own race. Don't look at anybody else. If I compare myself to the students who are doing better than me, like earning 10% a month, I would get depressed. But I am not them. Maybe they're just better than me, and that's fine. I just have to make sure that I improve myself each and every year. And I know the profit will take care of itself. Okay, so anyway, so these are mostly credit spread trades right here. A couple of directional trades sprinkled in here. So again, this profit right here, I think it equals about 22% increase in this account. And my other account is just Market Club trades, their model portfolio. So these are all directional trades here. I'll show you the charts here in a second, but this represents a little more than 10% of the size of that account, because it's only like a $5,000 account for the model portfolio. So, I opened these trades roughly beginning of February, so about a month, 10% increase. This is not guaranteed. This profit is paper. It's theory until I cash out and book the profit. But it's nice to see, a theoretical 10% rise in your account or theoretical 22% rise in your account in like a month. So think about how empowering that feels, where, I come from the whole buy and hold mutual fund environment, just like you do, where we never were able to do this. I did this on my own without a mutual fund manager, without a hedge fund manager, because someone taught me, a very rich person taught me a long time ago how to build wealth this way. So I want you to feel empowered and encouraged that you also are learning the same skill set. Now, my job at this point is to keep the profit. It's nice to earn this much profit. My job for the rest of the year is to keep it, to not do anything stupid. And what I want to do is because of the increase today, I looked at the market. I'm like, wow, SPY jumped up 1%, gapped up, high volume. And the first person I thought about was Warren Buffett. Now, Warren Buffett has these, sayings and things like that. And one of the better ones I love is be fearful when others are greedy, and be greedy when others are fearful. And my reminder of that is how I invest now. My long-term investment account, about a year or so ago, or maybe a few years ago, we changed up to where now we've decided that we're only going to invest, buy and hold long-term investing during bear markets. So we will stack cash, for however long, and then we will only buy, we buy stocks too, in the Family Freedom Fund, the strategy I use for that, primary strategy I use to build wealth for my family. So we decided just to stack cash and only buy during the bear markets. Why? We want to follow a billionaire's advice. Now I want to start following advice from billionaires. I'm like, well, if I followed advice from a billionaire, maybe before I die, $1 billion will show up in my net worth or my account. And so he says, be greedy when others are fearful. People are fearful during these market crashes. They're cashing out. They're afraid that the stock market can go to zero. That's what we want to buy. Be greedy when others are fearful. And also the flip side of that is be fearful when others are greedy. And that's what I thought about today, because I'm like, people are looking at the S&P going up. We have a new president. People are going to be excited and they're going to attribute stock market growth to him. That's fine. But, I had to say, honestly, a silent prayer, because they are about to have their shirts handed to them. I don't even know if I'm using the right phrase, but they're about to lose money because this move is unsustainable. I mean, it could keep going up. Bear markets usually happen around September or October. But I am sad, and I'm really, my heart's burdened for the people who are getting excited about this. They're going to start investing now. They've been sitting on the sidelines forever scared. But because of all this newness, new president, new highs, the Dow reaching 21,000, something like that, they're going to get excited and start investing. And that's what I start paying attention to, that irrational behavior. Everybody giving you stock tips and everybody excited about the stock market, because that generally means that, hey, it's about to fall. And so I am now fearful. I'm not greedy. I am fearful. I'm looking at all-time new highs. I'm looking at the newspapers and everything's positive. I'm like, I'm a little worried. And so I started planning my exits. Like, okay, when will I exit these trades under worst circumstances? I'm reviewing my trade plans, which are already in place, because you should have a trade plan devised before you get in trades. You should have an exit, meaning that you'll know when you're going to get out. So I'm looking at those and make sure they are still solid in place. For example, one of my trades, Facebook. All these profits right now is 551. Altogether, I think yesterday, you just subtract 551 from 323. You can see I was only up $200 and something. I was going to exit all my positions once. If they started losing money some more and it got to 200, I was going to implement my percent exit and close out the losing ones that were close to 50%. And Facebook was close to 50%, I think yesterday. I can't recall. But anyway, Facebook was one of the ones on the chopping block. I was ready to implement my exit plan. Right now, they're all doing okay, so I'm not worried about it. But I am fearful now because, one, this move is unsustainable. The prices have jumped way away from the moving average here. You can come back and do a historical analysis yourself to see what happens when prices jump away from moving averages. There's a reset, a pullback, and then, the moving averages usually come a little bit closer to prices. And so, I expect that to happen sometime soon. I just don't know when. It could have a nice long run up like it did here, and then finally not pull back, but just flatten out for a long while, 2 to 3 weeks, and give the moving average time to catch up. So that's what I'm looking to happen here sometime soon. Again, that's what I think. We all know the stock market doesn't care what I think. It will do what it wants to do. My goal is to trade what I see. And what I see is a very strong market. I'm not opening any more trades. I'm already in trades that benefit from this. There's no reason for me to open any more. My 210 formula is maxed out on both accounts, so I couldn't open any more in these accounts anyway. So I'm sitting tight, but I'm also going to be fearful. Because that's what Warren Buffett says, be fearful when others are greedy. And I can assure you right now, others are greedy. Okay, so again, going back to Warren, he also, I read an article about his $1 million bet he made about 10 years ago, where he said that the person, and this is my belief too, I don't say it a lot, because it sounds hypocritical for me to be an option trader. But anyway, he said that a person who just invests in an S&P index fund would beat hedge fund managers, would beat mutual funds, anything. And so he made that bet almost 10 years ago. And here it is now on this site. It's called longbets.org. I think it's a site created by Jeff Bezos, something like that. But anyway, you can read that here. You can Google that, Warren Buffett's long bets, and you'll find it. And you can see his argument here about why he thinks that somebody just invests in a plain old index fund will beat hedge fund managers. And this is a classic argument. The hedge fund manager was like, yeah, that is correct. A person, investing in an S&P versus mutual funds would do better because of the fees. That's why. But he said comparing it to a hedge fund is like comparing apples to oranges. And that's because hedge funds can go long and short, which means hedge funds can buy put options and things like that. So in theory, they should be able to make money when the market goes down. But the most updated articles here on Market Watch where it talks about Buffett blasts hedge funds as he takes an early victory bet. And what they're talking about is in his 2016 shareholder letter, he did go into detail about this bet and showed the performance here over these last, I think, 9 years, where the S&P cumulative is 85% and the hedge funds cumulative is about 2%. You can see their performance, which they are lagging behind. So on average, the hedge funds earn 2.2% compounded annually. And if you invested in them, you would only gain $220,000, but the index fund would have gained $854. He also talked about how those hedge fund managers got paid on this poor performance. And, he kind of ripped into them about that. This is what I also know to be true, which is why I gave my wife that investment plan. Is just don't worry about everything else. Don't worry about options. Just invest in a simple, plain, boring index fund. You will do fine. Most people, honestly, 90-something% of people do not need to invest in options. If they just listen to Warren Buffett, just invest in a plain old simple index fund, you will beat 90% of your peers. I know this to be true. This is why we do it also, in addition to options. People don't need options, but I like options. Why? Because of what I just showed you a few minutes ago. I know you can do just fine in an index fund, but I also know you can accelerate your wealth building if you can build a skill set to trade options and do it intelligently, not a cowboy trader who's blowing out his account, who's super greedy, who can't be disciplined, who refuses to follow the 2-10 formula. No, not for those people. Those people need to invest in a simple index fund and forget about options. But the mature group who are able to train themselves, I'm not born with discipline. I am one of the most undisciplined people you will ever meet. But discipline is a muscle. You can train yourself to be disciplined in certain areas. I'm a disciplined trader, not a disciplined eater, which is why I've always, for the last few years, I struggle with my weight. I don't struggle with it anymore. But anyway, discipline can be developed. Don't throw your hands up in the air if you don't have trading discipline, because you can develop it. Okay, let me move on here. I just wanted to talk about that. You can Google Warren Buffett stuff. You can read his shareholder letter. I love reading them, just seeing how he thinks. I want to model a lot of my thinking after him. And I've done that, if you can't tell by the training I put out. Okay, so let's go ahead and look at the charts I talked about. All these trades you see here, both the credit spreads and the Roth ones, which are the directional trades. So first, I want to look at PG, because what I want to show you is a case study of PG and